Now, with pretty much all the big technology names having reported earnings with broadly mixed results, but there were some notable exceptions on both extremes. We're talking now to Ben Kumar from Seven Investment Management with an analysis of where we go with some of these. It has been an interesting quarter. Q2 has delivered both extremes on each end of the spectrum. What's your overarching thought on what we've seen?
I think the established, if you can call them established, the big guns are delivering, right? Facebook, Amazon and Alphabet or Google, they are delivering the earnings. It's the upstarts where we're seeing a little bit of trouble, whether it's Netflix, whether it's Twitter. They're struggling a bit to establish themselves in this, dominating world.
You said there, let's start off with Alphabet. You said there about the good earnings and revenues, but the cost per click was down. Is that a worrying feature for Google?
I don't think cost per click really bothers Google that much. They know they can expand their reach. They know they are the preeminent search engine. They know that most people use Google even to answer their questions, right? They don't even bother clicking through the link. Google's there for them. So cost per click doesn't matter when you're increasing clicks at this phenomenal a rate.
What about the other aspects of the business, the cloud business, the Play Store, the hardware sales that they're pinning so much hopes on?
I think they've done it the right way. They've got this core business, this advertising revenue, and it's coming through so strongly that they can put the rest of their investments into this panoply of things. We're talking, as you said, we're talking about cloud, we're talking hardware. You've got their moonshot lab, whether it's self-driving cars, whether it's just some clever guy comes in and they say, here's $10 million, go and do something amazing. They are able to do that because they have this recurring revenue stream that doesn't seem like it's going away.
It's all about expanding businesses, isn't it? I mean, Amazon, we know, is a company you can go to buy things, but now, I mean, they've got their cloud business, they've got their Fresh and Easy, they've got Amazon Prime, which of course did so well, I think, on Prime Day a short while ago. Where's Amazon going? Because again, startling earnings, record high share price.
Amazon's doing a similar thing, and part of the reason Netflix is suffering is because Amazon is pouring money into producing its own content, right? Producing its own videos. It wants to be the place you go for all of your things. Google just wants to be the place that you use to get to where you want to go. Amazon wants to provide you with almost everything you need: entertainment, goods, food, everything. And it seems to be working, right? They are creating a buzz. They're not losing much in customer satisfaction, and that's really critical.
You mentioned Netflix. I mean, this is part of the old FANG setup as it was. Quickly move on to their earnings. I think actually earnings are pretty much in line with expectations. It's all about subscribers there, isn't it? As you say, up against the behemoth of Amazon's Prime. Exactly.
They're going the opposite way to Amazon or to Google. Their subscriber levels are falling, and they're increasing their, how much they're charging them. That's a really difficult thing for Netflix to do. It's not established enough yet. Amazon has as good connection to the consumer as Netflix perhaps does, and is now producing its own content. It's not hard to license a back catalogue of films or TV shows. Everyone is doing it now. Netflix is under some pressure.
Yeah. What about Apple? Talking about some of the longer lasting names. I mean, Apple's been around a long while. If you go all the way back to the first Apple Macintosh that was produced several tens of years ago. It sold its billionth iPhone, I believe, just a couple of days ago. But here we are now. The company did surprise on the upside, but it's got slowing sales of iPhone. This has got to be a worry.
I think it is a worry for Apple. Slowing sales of your main good is an issue. A billionth iPhone sold suggests that you're approaching saturation. I don't think you're anywhere near yet, but you are getting to the point where Apple's main good is not going to be able to provide the bulk of the earnings anymore. So they're trying to expand their iStore. They're trying to expand into other forms of hardware. But, unlike Alphabet or Google, where you have this recurring revenue, people will search for things forever. People might not buy an iPhone forever. Apple needs to diversify somehow. And they've got clever guys and they do goods that make most people's world a little bit better. That might be good enough, but they need to broaden.
To broaden into what though? Because we've heard Apple iWatch seems to have been a relative flop. We've heard about cars as well. I think we've discussed this before, haven't we? The amount of money it's going to take to get into that sort of area. What has Tim Cook got to do to take Apple onto the next level?
Sometimes I think Apple is too concerned with creating the new trend, right? Saying, here's an iWatch, it's going to be the next big thing. I think sometimes they have to wait for the trends to come to them. Sit back, kind of like Samsung used to do, and say, people like smartphones, okay, we'll design the best smartphone we can, a little bit behind the market leader of Apple. Apple might now need to sit back and say, what do people want? They want wearable tech so they can play Pokemon all over the place. Okay, we'll sit back, wait a couple of years, and then produce one that is top of the line, rather than try and say, here's changing your world again. It's different for them, and it'll be difficult, and Tim Cook will hate having to say, we're not the leaders, we're followers.
We like to do some technical analysis here at IG, and one of the things we've found it difficult to do is using technical analysis when you're seeing record highs for the likes of Amazon, also Facebook as well. It's another one we've got to talk about, which is just this share price is the nearest thing to a straight line as you can get over the last couple of 3 years. And I mean, it's confounded all critics.
Yeah, it's quite interesting, isn't it? Technical analysis doesn't work for tech stocks. Facebook has been something that, I know when it was launched, when it IPO'd, we said, will this ever make money? Can it catch up with Google? Can it do the same kind of thing that all of the big tech companies want to do? And it turns out, yes, and then some. They've really managed to walk the line that I was very worried about of providing people with data, providing them with personal directed ad content, and not breaching the privacy feeling. Now, I'm not talking about privacy lawsuits and things like that. They will always rumble on. I mean the feeling that you or I or anyone in the street gets that Facebook knows too much. They haven't done that. They're targeting ads without you feeling like they're spying on you. That's a win.
Yeah. Twitter. We've left this to last because this is all by itself really, because it can't seem to monetize. It's got an increased user base, and you hear people using Twitter all the time. US presidential elections, they're all using it, but they can't make money. And Jack Dorsey's back to try and help the company to do just that, but it doesn't seem to be working.
Completely right. It's everywhere. A news story has some tweets by some famous people at the bottom of it, or it's on the screen when you see it on TV. But I just don't think they're able to monetize that kind of publishing freely available content in nice short characters. That's brilliant, that's fantastic. It's very difficult to see where you start generating revenue from. You see the adverts on Twitter, people aren't clicking on them. They're interrupting what they think their Twitter experience is about. Their Twitter experience is about kind of seeing what's going on in the outside world and reacting to it. It's not about shopping or looking to improve their business data services. They need to break that link somehow, and I think it's really difficult. It comes up again and again, but acquisition target for one of the big boys, it would make sense.
But how are they going to? I mean, it's interesting, isn't it? I mean, looking back at Facebook, they've already got Instagram, they've already got Messenger. Amazon, do they really need it? Probably not. Alphabet, it can do its own thing. I mean, it's difficult to know who's going to take it over.
If I were Alphabet, I would be thinking my social media presence is quite low, right? Google Plus didn't really work. So could they take Twitter and just use it as a route to the world? Could they use it to gather more data on people? Yes. And what do? Well, they provide advertising based on data. It might be a loss leader for a long time. It might never make money. Fortunately, Google's got a lot of money. They can afford these things.
Yeah. Finally, got to talk about Nintendo. We've not spoken about this before when we talked about some of the big tech stocks. It's been in the news recently, of course, because of Pokemon Go. And I've also heard reports that, in fact, Nintendo doesn't actually have much responsibility for Pokemon Go, although it does various little bits with it. But the stock price went up and came down again because there's worries about how it's going to make money. What about the Pokemon Go? How does it sit within the tech space? Who's making money out of it?
Well, so you've got Niantic, who obviously designed the app, actually a spin-out from Alphabet, right? So it's a spin-out from Google Labs, funded by Nintendo and Google and the owner of Niantic. And is it going to be changing the world? It does seem to have done something that no one's seen before, right? What we're seeing from Niantic is engaging people in their phones and with the world around them. I think they need to move the big jump, right? The big jump is you're not engaging with your screen anymore, that you're engaging somehow with the world around you and the digital representation, the augmented reality. You're doing that without constantly walking around bumping into people. I think Nintendo are working on something that does just that. They may be able to monetize that incredibly well. And Niantic has proved that you can come from nowhere and overnight have the biggest selling app that is still being used a month later. That's what's interesting. Right? This hasn't faded. It's not a Flappy Bird craze. What you're seeing is people using it kind of as part of their lives. That's a big win if you're a tech company.
Yeah. Right, let's look into the future a bit here. What about these tech stocks? Where are they going? What are they going to be doing new that we've not seen before that is going to be the next big thing for these companies that need to innovate?
So the one area I think it might be interesting is finance. These tech companies haven't looked at finance, right? Now, a lot of people interact with their banks on a daily basis, and it's probably not that satisfying. What Facebook, what Google, what Amazon do is make interactions for just transactions, they make them really satisfying and really easy. If I were them, I would be throwing a lot of money at getting something in the fintech sector out there. You trust Facebook with all your data, you trust Google with all your searches, Amazon knows your address. Why not, trust it with your money as well? That's somewhere I think could be revolutionary.
Okay, all right. Interesting thoughts. We'll be back with you on that in 10 years' time. We'll make another appointment to talk about that as a potential future for some of these tech stocks. Ben Kumar, thank you for joining us. Ben Kumar there from 7 Investment Management.